Now that I've started trading Goldbach, I'm going to reveal my trading model using Goldbach levels and times, plus my background from learning from Zusi and JME, and that whole model as well, and how I incorporate Goldbach into this trading model. So let's dive right in. My name is Jack with Avodah Trading. If you like this type of content, make sure you like and subscribe. Let's get into this. So first, of course, you want to start with your higher time frame analysis. In my case, it's either the 1 hour or the 15-minute. If the 1 hour is not clear to me, I go down to the 15-minute. So let's turn on my liquidity levels. Let's turn this on, but only enable the liquidity sweeps like that and liquidity levels. And let's see what we're looking at. So looking at the 1 hour, I'm seeing, okay, we got a big 1 hour gap here. Still not super clear to me. And I'm looking at the levels of Goldbach. So right now I see that price is holding above this 41 level. And let me look at my mid levels here. Let me turn my mid levels on. There it is, mid levels here. So this, if the 1 hour isn't super clear to me, like this gap is super huge, I'll go down to the 15-minute to get my higher time frame analysis. So in this 15-minute, this gap was in line with this mid-level for this Goldbach level, right? Because we know that within Goldbach, price moves from level to level, and then depending on which flow gate it's in, it depends on what it does. But essentially, on the higher time frame, Goldbach levels, price will oscillate between level to level. So levels to mark out the most important points of interest or PD rays are the ones that line up with those levels. So this 15-minute gap lined up with this mid-level from the mid-level of 41 and 47, right? So that's how I'm lining that up. I'm looking at that as my first initial draw on liquidity. And as long as we hold above this 41 level, this 15-minute gap, we close above, the body close above this, not gap, this 15-minute candle, we close above here with the 41 level, so I'm bullish, right? So, but we have a 15-minute gap here. If we drill down to the 5-minute, you'll see we have some more gaps. I don't know why I marked this out. I think I'm going to have been a 9-minute gap. Yeah, it was an, I don't know why I marked that out. But in any case, that let's just mark out a 15-minute gap. This is a 15-minute gap here. And as long as we held above this gap, this is my POI, this is my draw on liquidity. So first step, let me write this down. High time frame DOL. And higher time frame POI. Identify those. So let's say align with GB levels. So all this align with GB levels. I mean, that's the way that I see price now. Is everything's really got to align with Goldbach levels to be a significant POI or draw on liquidity. So that was the higher time frame analysis. So if we come down to our 1-minute time frame and we actually on the execution time frame, here's my model and what it looks like. Let's turn on the SSMT indicator and let's make this a fractal fib and let's make this float so it's to the right. And then on the quarterly theory, let's enable the quarterly cycles and this true opens and get that going. So this is what my chart normally looks like. So here's what I'm seeing. We just broke above. So here 930 hasn't opened yet, so let's play it out. So I'm looking at it. There's my draw and there's my POI. We're engineering buy side liquidity above here. Is what I'm seeing. We're dipping back into kind of a lower PO3 range. And at open, we dipped back into this lower PO3 range, came into this rebalance layer, and then now, and And then, so what I'm looking for is, in this case, it was a CST, and I'm looking for the right time to align for a reversal, right? In this case. So let's play it out. Boom. And my indicator tells me that a SMR has happened, GPT SMR lock. It's Algo 1 that it's running because it's going from 29 to 17. That's 29 to 17. Now, my target is going to be a 3 or a 7 for the time. So now on my indicator, I can put on my projected targets of 3, 7 time targets. So now I have vertical lines that'll show, where's it at here? Taking its sweet time. Well, there it is. Show 4 projections. So 3, 7, that could be where time would meet and we would hit that, my target, right? So let's play it out. And so my entry level, my entry model, is either, in this case, it's basically inversion or an order block, if it's really clear. In this case, it was this huge inversion of this 1 minute. My SSMT indicator marks out the inversions. And then in this case, we're below TMSO as well. So let's type this all out. Where's that? Where's that box? Let me move it back closer. Where's my text box? There it is. Let's get it back over here. Okay. High time for pure, higher time frame. Okay, now I'm looking for lower time frame entry. I'm looking for SSMT. I'm looking for GP time. And then I'm looking for a CST. And then I'm looking for my targets. My target's going to be a TP1, depending on the trade plan. Well, I'll get into my targets here in a second. But TP1 is going to be EQ, 50%. That's aligned with a unfilled gap. And then TP2 is going to be the GIP level. Yeah. So the GIP. So let me show you what I mean here. So in this case, the long that I took this morning got in somewhere around here. Stop was at this gap, and my first TP was 50% EQ. It also aligned with I don't know what had this line. Oh yeah, that was the unmitigated gap of that 5 minute, I believe 5 minute gap it was, and it doesn't exactly align with EQ here, but yeah, 200 level. I was looking at this. There's a little CP right here, so I think I was looking at this in the morning. 208. That's 208 level aligns with 50%. So any unfilled gap or any like previous quarter high or low is going to be a good liquidity pool for me. Plus, it aligns with this EQ level on the Goldbach level. So let me just take that with the Goldbach levels, right? So that's what I mean by TP1 EQ. So we play it out. Boom, there's TP1. And then TP2 is my GIP level, which is right here. And that perfectly aligns with this, not perfectly, but aligns really closely with 242 level. I think I was looking at the 15 second. That's what it was. I could see some different gaps here. Yeah, this gap here. That's what I was seeing. I was looking at the 15-second chart. Sometimes I look at the 1 minute, sometimes I look at the 15-second, but this 15-second gap right here aligns with this GIP level. So that ultimately 250, and it's a nice even number. That was my second TP. So that's why for my second TP, it's always going to be the GIP level. That's my model. TP1, 50%, TP2 is GIP. And if I have a runner after that, then it's external range, you know, if I think it's going to go higher. But play it out. When we go through the flow gates, rebounds there, and then boom, we hit GIP. That's TP. Plus, we created SMT there. On the entry model, we had, of course, we had a SMT here. The cherry on top would actually be double SMT. So double SMT, even more high probability. So if you had a double SMT, that'd be more high probability, but with a Goldbach time, this being a 17, a reverse algo, that gave me a lot of confidence that this was going to be the move that I was looking for. And we played out a little bit more. The time node that prints, I believe, is a 3 node right here. So that's telling me that this next swing high, that's a swing high there, because that's the next number on the algo path. So plus SMT up here, nano SMT, and a micro SMT, so that, you know, would retrace price lower. And that's all. Yeah. So anyways, going to my entry model, or my model, that is essentially it. It is higher time DOL aligned with GB levels, higher time frame POI aligned with GB levels, and then my lower time frame entry is an SSMT. I go back time, a CSD, look for all those in that order. SMT, go back time, looking for that CSD, and then my TP1 is EQ, and TP2 is the GIP levels. So that is how I use Goldbach with my trading on all that I've learned. Shout out to all my mentors, you know, like everyone that I've learned from, but that is essentially the distilled model now that I found has been working really well. And it makes sense on where price moves and how price moves now. So I can make sense of the markets. I'm not getting tripped up on wrong draws on liquidity or wrong points of interest, because they're aligned with Goldbach levels. I'm confident in my POIs and my draw on liquidity now. So that's that. So I call that the Algo Logic model. So if you guys if that interests you, or if that's something that aligns with how you trade, feel free to use this model. And then, of course, if you're interested in any of my indicators, those are all in the link as well. My Algo Logic Suite includes all 3 of these indicators. It's the Goldbach Master Suite, the Goldbach Quarterly Theory 4-in-1 toolkit, and then the sequential SMT indicator as well. Plus all my other indicators that I have as well, includes all those for a really low price of like $35. So if you're interested, check it out in the link. Hope this helps you guys on the entry model and gives you clarity on what you can look out for. But this is an A++ setup that, I mean, it's just a banger of a model. So no gatekeeping here. That's my model. Feel free to steal it, and hope that helps you guys out. So take care. We'll see you on the next one. God bless.